no! Our GDP is lower than expected. Is our economy starting to decline? Check this video out! So hey guys, I just got back from Baguio in Manila. I was a bit under the weather today, but I still wanted to create this video for you guys to talk about what's happening in the economy, because as you all know, there's a lot of fears, there's a lot of concerns that have been tossed in and out over the past few hours, especially when the BSP started to send out those data points as well. So please remember this. I'm a firm believer of the Philippines. I'm very optimistic, but there are certain things that are happening based on the numbers that can cause us to I guess on my end, no, to be a bit more wary of the situation. So let's try to break it down. First of all, the GDP, second quarter GDP is at 6%. What does that mean as a whole? First of all, the projection of the BSP, the projection of the government was around, they were projecting plus 7%, somewhere above 7% for the year, poising us to be a very, very, very fast economy. Please balance this out also, that 6% in all intents and purposes is still good. It's still fast. It's still faster than the global average. However, my issue with that is this. We've been missing targets over and over and over again. Secondly, this is the first time that we are below 6.5% on a quarter basis. So for us to hit the projections of the government, we're supposed to hit around 7.7%, if my math is correct, to be able to at least get 7% GDP. So it's a bit worrying, especially for those who've been following my videos, because I would always say that us borrowing money, our foreign debt, is okay as long as it translates to a very, very strong GDP. However, the problem is that it's not even strong. We are not hitting expectations. We are not going beyond expectations, but we are underperforming based on the expectations that we ourselves set. So from that perspective, that's something to consider. That we are seeing our economy. We're nowhere near where we were when 2013 hit, that we were a much better economy back then. So that's one thing to consider. And for those who've been following the videos, I've mentioned that don't just look at the GDP, look at also what's happening in inflation and in interest rates. So negative things have been happening as well in inflation and in our interest rate. The Bangko Sentral, in response to what's happening to curb inflation, they just posted a 5.7% inflation rate for the month of July. To combat that, interest rates were up at 4%. So now we are at a scenario where interest rates are continually increasing. It's now at 4%. We don't know how high it could still go. Inflation is at 5.7%. Please remember this, there will be more effects of this, because the train law, the excise taxes won't just end this year. There will be more excise taxes that will be passed on next year as well. So that will still put a larger shroud of, I guess, of pessimism in terms of how high the inflation would go. Please remember this, everything, if you've been following the videos, everything is hinged on oil. Taxes were placed on oil. Oil prices are high, and to buy oil, the dollar is high as well. So things are not as rosy as what we want it to be. Things are not as good. Another disclosure, our gross internal reserves, our foreign reserves, which is protecting us sana from this high dollar swings. It stood at 80 billion before. It was 85 billion a few years back. It dropped to around 80 billion as per the last report. Today, it's at 77 billion. We've dropped $3 billion already. So we have declining foreign reserves. Inflation rate is high. In response to that inflation rate, you have the BSP increasing interest rates. The GDP is slowing down. Add the high US dollar, add high oil, add the effects of train law as well, then add the fact that we really don't have as much infrastructure projects yet going as what we expected sana. Then you also add that the second quarter earnings reports of listed companies above and beyond Ayala, MPI, SMPH, and just a few stocks. Majority of the stocks that have been listed are not really giving good enough results. Earnings results from corporations are not as good. So that's another trigger. That's another bearish trigger also from an economic perspective. And you add that to the trade gap that we are having, meaning we are still importing more than what we are actually exporting. Then you add our increasing debt to the mix. Please remember this. I mentioned this, that it's okay to borrow as long as it translates to a faster and stronger GDP. But since the GDP is not as expected, that debt will be more pronounced now. Our debt to GDP ratios will be much higher. So let me just give you some effects. Now, I'm not saying this will happen, but this is a possible scenario. As interest rates go higher, what does it do? Some of those loans, let's just go to housing loans first. Some of those housing loans, people who did not get fixed interest rates, meaning there will be a point in time that they will reprice. If interest rates go too high and the repricing will be too expensive for people, worst case scenario is some people might not be able to afford it, because already, please remember, above and beyond their interest payments for their loans, for their housing loans, cost of living, cost of goods have started to go higher as well. So there might be a possibility for those people to default on it, which will impact our real estate market. So that's one thing, but it doesn't mean it's wrong, because why? Money can be made off of that. If you're a person who's storing up cash, you can make money off of that and buy a lot of those cheap properties as well, should it happen. So recommendations, I've posted it also in a Facebook post, but this is an opportunity for you to store as much cash as you have. Cash is options. Cash will give you the ability not just to hedge, but if opportunities to make money will surface, you can use that cash to allow you to either invest or do businesses that will position you to make you richer much more later on. Another thing that I'd like to mention is this. In spite of that, if you are a trader, now investing is another thing, but if you're a trader, you can still make money. Why? Support and resistance principles, technical analysis will work regardless of the economic situation. So money can still be made even in the stock market as well. But at the same way, if you have US dollars, Hong Kong dollars, Singapore dollars, or other currencies, hedge, keep them first. Oh, it's nice to have, I guess, a protection also in terms of currencies should the peso devaluate further. Yeah, of course, you'll be able to use more buying power here if you bring it back here, but why not hedge? Why not start exploring also investing in US equities as well, or learn a new skill like cryptocurrencies? What I'm saying is this: a lot of people get scared when opportunities like this happen. Of course, risks are surfacing, but I'm really more of how can I make money off of this? How can I find ways? How can I find opportunities that this is the situation? What can I do to make to position myself better for the long term? So that's it for now. It's not one of the best reports that I could give you. It's not one of the most exciting reports where, you know me, I'm a big fan of the Philippine growth story, but things are changing right now that I'll be more cautious on the way I would act. I'll be more cautious on stockpiling cash as well. So that's it for now. If you have any questions, comment below. If you want to clarify anything, also comment below. But I really believe this. Let's not, aside from being concerned about the economy, let's be concerned also about our personal economy, that whatever happens outside should not affect the way you create your wealth, because money can be made as long as you hustle, as long as you have grit, as long as you have determination to find ways on how you can make money at your own terms. So that's it for now. I'm flying to Iloilo tomorrow. I actually need rest, but yeah, flying to Iloilo tomorrow. So to you guys who are attending Stock Smarts there, I hope to see you, and I hope this video helps you trade well, trade strong, trade smart. Marvin Germo. See you all again soon.